Yeah, hello everyone, and good day to you all. Welcome you to today's section on fixed asset management in Asaerp. So today we are going to look at few major basic um, operations in asset management. We are going to look at how to create one asset category. That is where you set up the depreciation policy of your asset. We're also going to look at how to create item group for a fixed asset. Thirdly, how to create asset as an item. Number 4, how to post the purchase of fixed asset. 1 through journal, number 2, and through purchase invoice. Then after that, we're going to look at how to set up the asset depreciation. You set up the asset for automatic depreciation. Then after that, we're going to look at how to move asset from one location to another, or from one employee to another, from one department to another. That is under asset movement. Thereafter, we're going to look at how to scrap an asset. Also look at how to carry out asset revaluation, asset disposal, and at the end of the day we are going to view or look at 3 major fixed assets reports. One among them is asset depreciation ledger, number 2 is asset depreciation and balance, and thirdly asset register. So that's all we are going to cover today in this section. So let's look at asset category. For you to locate your asset category, go to your home page. Your home page, locate asset, click on asset. You click on asset, you now locate asset category. From here you say add asset category. Then the name of asset category name, we are going to create that of motor vehicle. Motor vehicle is the name of the asset category. Okay. Then you go straight to finance book detail. Add row. Then here choose the depreciation method. We are using a straight line method. Then what is the total number of depreciation in months? For instance, this motor vehicle, the depreciation rate is 20%. Of course, you know 20% is 5 years. Then convert that 5 years in months, it should give us 12 months. 60 months. So the number of depreciation here is 60 months. That is 20%, which is 5 years. The 5 times 12 is 60. Then frequency of depreciation. Okay. Depreciation date is can leave it manual, but as of today, put 31st December, though the system can ignore it. Okay, so that's it. That's it. Okay, so number of frequency of depreciation is 1. That means 1 per year, per month. Sorry. Total number of depreciation is 60 months, which is 5 years. Frequency of depreciation, how many times do you want to depreciate per month? Is once. That's the command. So go to the account table. This is the company name demo. What is the fixed asset account for motor vehicle? Is motor vehicle cost. You choose it. What is the accumulated depreciation? Is motor vehicle accumulated depreciation. What is the depreciation expense account? it is depreciation. For now, there's no work in progress for it. Just ignore that one. So save. First of all, let me recap. Enter the asset category name, motor vehicle, finance book detail. Under depreciation method, you choose the method being operated in your company. Here I choose trailer method. For motor vehicle, which is 20%, that depreciation rate, which is 5 years, 5 times 12 is 60 months. The number of depreciation or frequency is once per month. And you now come to the account, choose fixed asset account for motor vehicle, which is cost. The accumulated depreciation is motor vehicle accumulated depreciation, and depreciation expenses is depreciation. So you save. Good. That's here you've created your asset category for motor vehicle. In the same way, you can also create for your plant and machinery, furniture and fittings, and other asset categories, which you must have set up the cost and accumulated depreciation in the chart of account. So that is that for asset category. So the next thing is to create fixed asset as an item group. Because before you create asset as an item, you must set up the item group. So from here, from a search bar, you type item group list. Item group list. Let's go to the list view. You choose the 3 types. So add, from here we say add child. The name of this, what we are going to add is a fixed asset. Fixed asset, that is the asset group. Item group, fixed asset. Fixed asset, because before you are going to create items as fixed asset as an item, the same way you created inventory items like AGO, PMS, or whatever. The same way the asset, for you to be able to set them up for depreciation, you are going to set them up as an asset. First of all, we set up fixed asset as item group. Now we are going to next session or next action you are going to take now is to set up the asset as an item. For instance, we want to purchase motor vehicle. When we purchase a car, we have different type of car. We have vehicle, we have car, we have trucks, we have van, and so on. So assuming we want to buy Toyota Corolla 2024 model, Toyota Corolla belongs to car as a group. It belongs to the group car. So let us create car as an item, as a fixed asset. So we, from our home page, go to a search bar, type item list. Item list. Good. When you create this, you say add item. We are going to create car. Item name, the same car. Then asset category, item category is fixed asset. Good. Whenever you are creating fixed asset as an item, for instance, car, table, chair, air conditioner, laptop, desktop, and so on, we are going to pick item group as what? Fixed asset. Unit of measurement, you measure in numbers, so you don't maintain stock. So click on edit full form. So confirm all this, then go to accounting. Okay, from here this maintain stock must be checked. Can remember, you must check it. Then come here, you say is fixed asset. Check is fixed asset. You can see it. You can see the magic. Let me go back. Check maintain stock. Maintain stock. Then come here and say, as you're maintaining stock, you say it's fixed asset. Once you say it's fixed asset, now the asset category field will come up. You choose the asset category and we choose motor vehicle because car belongs to motor vehicle as a category. I don't know if I'm communicating. We're creating a car because we want to buy Toyota Corolla or Toyota Camry 2024 version. First of all, you must create the car as an item, which is here. Item group is fixed asset. You check maintain stock. Once you check maintain stock, you will now see that this is fixed asset. Checkbox will come up. You tick it. Then the asset category field will come up. You choose motor vehicle as an asset category. Then you save. At this point, you've created car as an item. Remember, car is an item. Motor vehicle is the asset category. But the asset now is Toyota Corolla. So we want to buy a car. There's no need of you going to create Toyota Corolla Camry 2024 as an item. No, it's car. It's when we are creating the asset for the possession. We are not now specify or indicate specific name of the asset, which is Toyota Camry 2024 model. So that's it for creating fixed asset as an item. So the next thing now is to buy. We are going to buy the asset, the Toyota Camry, and the cost of the asset is 4 million naira. 4 million naira. So we are going to look at how to purchase asset using purchase invoice and using journal entry. So let us first of all buy this asset, buy this car using a purchase invoice. So you look at your purchase invoice, type purchase invoice list, purchase invoice list. Yeah, take us to purchase invoice environment, add purchase invoice. Good. Look at the date. You want to buy the asset as at 1st January 2024. Supplier, who are we buying it from? We say we are buying from Chris Trading Limited. Good. Accounting dimension, that's where we select the cost center. The cost center is Lagos. It's from Lagos office. Now go down and pick to the item table. You know, it's not an inventory item that will update stock. We are not updating stock. Whenever you are buying, posting, purchase of fixed asset, you don't update stock, because once you update stock, you're going to add to your warehouse. You don't add it to your warehouse, so ignore it. So item, you choose car. The car we created before, you choose it. So how many cars are we buying? We are buying one at the cost of 2 million naira. That is the cost of the asset. Good. Car as an item, quantity is 1, price is 2 million naira. Then you save. And submit. Yes. Now we've purchased our assets using purchase invoice. We purchased our asset car using invoice, and this car we purchased is Toyota Camry 2024 model. Now also second, let us purchase another car. This one now is Hilux, or maybe another one would say BMW 2024 24 model, and the cost is 3 million naira. This one we are going to use journal entries to acquire it. So there are two ways: either you use journal entry or you use purchase invoice. Maybe the one you normally use purchase invoice is those things you just go to all these Alaba, those traders that don't have invoice, you just cash and carry basis or across the counter purchase. I don't know if I'm communicating. So you use journal. It's advisable you create all the suppliers, then use purchase invoice to post the purchase of all your fixed assets, so that you're able to track the vendors for tax purposes. So let us use journal to post the purchase of this BMW 2022 model 24 model. So locate your journal, just type journal entry list, add journal entry. We are also going to use a date. The date is 1st January 2024. Now look at the purchase table or accounting table. We bought this thing from also Chris. So account type here is, you buy from your vendor, which is creditor, which you can see that the party type is supplier. So party is Chris Trading, you can see it. Account is debt creditors, party type is supplier, and party you choose now Chris Trading. So the account is credited by 2 million naira. I don't know if I'm communicating, because this is the supplier. Then while the fixed asset account is credited, which is motor vehicle cost. Motor vehicle cost is debited. I don't know if you understand what I'm saying. The vendor is credited, while the asset account is what? Debited. So that is that. You come down here, put your user remark, then BMW 2024 model. It's a purchase of BMW 2024 model. Let me go back from journal entry, specify a date, credit the vendor. You can see the account is creditors, party is supplier, party is, you now choose the name of the vendor, enter the amount on the credit side, then the asset account, the cost account is debited. You can see it here. So specify your narration, then you do what? You save. So you can see there are two ways of posting the purchase of your fixed asset. So once the asset is purchased, we are now, the next thing is to set up the asset for depreciation, automatic depreciation. So you don't need to begin to passing the depreciation journal every month. So just set it up for automatic depreciation. So now we purchased two assets. One, we use purchase invoice, that's the Toyota Camry 2024 and the BMW 2024 at the cost of 4 million naira and 3 million respectively. So that's one thing I want to specify here. Is good that you use purchase invoice in posting your the purchase of your assets, so that you'll be able to capture the name of the vendor in your fixed asset register. Because if you use journal, the name of the vendor will not be provided there. So that's my advice. We just want to show you that you can post recognize the cost of the purchase of this asset in ERP using both journal entry or purchase invoice. So right now we are going to set up the asset for automatic depreciation. So go back to your home page, click on the icon, click on asset, now click on asset, click on asset. So add asset, and click on asset. The asset has setup voucher will come up. So item code, remember we created car as an item. You can see it as fixed item to come up. It's also here. So what is the name of the car? You know, the car as an item will also appear here. So asset name, the specific name of the item. The first one we purchased was Camry 2024 model. Camry 2024 model. That is the specific name of the asset. I don't know if I'm communicating. So you can see by default the asset category is already here. You don't need to choose it yourself, because at the point of creating this asset as an item car, we specify that the asset category is what? Motor vehicle. So it's there by default. So asset owner, take note, asset owner is company. Go to location. What is the location of this asset? I use Lagos. Okay, I choose Lagos as the location. Who is the custodian? The custodian here now mean the staff. The staff who is using this asset is the custodian. Then this staff that is using it, what is his department? His department is in account department. So it's very important. It's very, very important. Who is the custodian of the asset? Who is the what is the department of the staff or the employee? Now, from here, you proceed. It's not asking is the existing asset, it's corporate asset. Here, ignore all these two fields, because we are going to bring in the asset gross amount using the purchase invoice of the asset. So then you come to the accounting dimension, which is the cost center. Or the cost center of this, we choose Lagos. Good. Then purchase detail. What is the purchase detail? Sorry. Come down. The purchase detail, you can see here we use purchase invoice in bringing the asset. Purchase invoice, or the purchase invoice number. Look at it here. You have to note it down somewhere. This is the purchase invoice. You can see immediately we choose the purchase invoice, click it. You can see the asset is already here. Hold on, let me confirm that. Purchase invoice, which is invoice list. Okay, that's it. Okay, 2 million naira is the cost. Okay, go back and see. I want to confirm it. Purchase invoice number 007. Go back. Okay, so you can see it. Immediately you choose from purchase detail. Immediately you choose the purchase invoice number. Everything about the asset will come up. You can see gross amount is there, quantity is 1, available for date of purchase is here on 1st of January 2024. By default it will appear. So what is the date you put the asset into use? Let's assume we also put into use on the date of purchase, you put it. But if you don't put into use on that day, there's no need of what you specify here is the date, the actual date you put into use for depreciation purpose. So it's advisable you don't set asset up until you put into use. So 1st of January 2024 is the day the asset was put into use. So go, the next session is, I don't hope you're taking notes, depreciation session. you say calculate depreciation. It's very important. If you fail to do this, the asset will not be depreciated. So check this, calculate depreciation. Then if you do that, you come here, you can see by default every information you set up in the asset category, they are all here. So this asset now, when do you want to start the first depreciation? You know, since you put it in use in 1st January 2024, so on the end of the month, 31st what's it called, January 2024, the asset should be depreciated. So other ones is about asset insurance detail. If the asset is insured, you provide their details: insurance policy number, insurer, insured value, insurance start date, end date, comprehensive insurance. So all the data will be there. So if you also want to schedule the asset for maintenance, it is also here. Here you check it, you set them up, and so on. So at this point, you save. At this point, you save. Once you save, I want to show you something. Scroll down so you look at the depreciation table. You can see the depreciation table. 31st January 2024, the depreciation. This is accumulated depreciation. 29th February 2024, the depreciation, accumulated depreciation, till the end of the 60 months. The end of 60 months, you see it here. Can you see it? The accumulated depreciation is equal to 2 million naira. So that is it. Once you confirm that the depreciation table is in order, you are good to go. So confirm every other detail from the item you pick as the asset item, the asset name, which is Toyota Camry. Okay, let me specify it. Toyota. It's very good. You confirm your enter before you submit, and you specify the owner, specify the location, the custodian, their department. Forget about here. We are going to use here when we are setting up the asset we acquired using journal entry. So accounting dimension, specify the accounting dimension, which is a cost center. I want to choose Lagos. Okay, then purchase detail, choose the purchase invoice number of the asset. Automatically the gross amount will appear, the quantity, the date of purchase and date you put into it will come. So you have the one to specify this one. Then come to the depreciation section and check calculate depreciation. The next is to check the finance table and specify the date you want this thing to be depreciated, which is 31st December and January 2024. So you confirm your depreciation table that's in order. Once you do that, you save and submit. You submit, so you're good to go. You can see you have set it up for depreciation. So at the end of today, which is 31st January 2029, on the end of the month that you specify, this asset will be automatically be depreciated. The system is going to pass a journal and depreciate that asset. At the end of 29 January 2024, it's going to pick this one and submit. At the end of March, we submit, and so on. So you have to be careful. Once you acquire your asset, immediately you put it to use, set it up so that the month will not pass. Assuming you put it to use January 2024 and you are coming to set it up in April 2024, you can see that January, February, March have passed. But you can still set it up. When you set it up, what you will do is to come to the month. For example, that January, February, and March has passed. Just come here and click on this, the column for the row for March. Click on it. You see an icon that will come up somewhere here that will tell you create general voucher. Once you click on it, the same will going to create the past 3 months for you. Then from subsequent months, for April and go on, the same will continue to automatically submit the depreciation journals for you. And that is that for setting up asset depreciation for an asset you acquire using you posted it using a purchase invoice. So the next one, let us set up the acquisition of BMW 2024 that cost us 300 million. So we are also going to go back to our asset, go back to the home page, your asset, click on asset, then you can see the one we created before. So say add asset. What is this asset? BMW 2024, but what is the item for it? Is car. It's a car. You understand? So item name you see come as car, but if we really want to specify it as BMW 2024 model. Okay. Asset category by default will come. Who is the asset owner? Is the company. Company is the owner. Location is also Lagos. Location is Lagos. Okay, or let me use Abuja now. Let me use Abuja at the location. The custodian, who is the custodian, who is in charge of this? I'm going to use Mr. Darlington Ojo. What is the department? Is also in account department. Is the head of department. So now in this case, we are going to check this is fixed asset or is existing fixed asset. Take note. When we set up the asset we acquire using we posted the acquisition using purchase invoice, we did not check this. Remember I said you should ignore it. Now we are setting up the one we posted the acquisition using journal. You must check this. I repeat, you must check this. It's very important. Check it. By the time you check it, you now go down, put your accounting dimension, cost center. I don't know if we have Abuja. Okay, we have Abuja. Then purchase detail. You'll be the one now to enter the purchase detail manually. Take note. You'll be the one to enter it. But in the case of setting up after you have posted the acquisition using purchase invoice, it was picked automatically. The minute you choose this purchase invoice number, the gross amount, date of acquisition, and then you put under into use will come up automatically. So here now you are going to enter the amount. You should take note, if you don't enter the amount accurately, you are going to distort the reporting. Date of purchase is 1st January 2024. Date you put this into use, assuming is also 1st January 2024. This is very important. You know, you have past journal. If debited motor vehicle costs 3 million naira, if you put here and put it maybe 4 million naira, at the end of it, you will notice that this asset will be over depreciated. You start the MBV will be negative. So it's very important because the actual cost is 3 million and you are putting 4 million. The asset will be over depreciated. So you have the cost as posted in the journal must be equal to the cost as we set up in this asset depreciation setup or environment. So come to depreciation. You must also say calculate depreciation. You must command it. Open depreciation. There's no open depreciation form because you just acquire the asset. So come here. At what point do you want the asset to be depreciated? You can see it's already here. You choose it. 31st January 2024. If you put the asset in use on 1st of February, remember, depreciation will start depreciation on 29th of February 2024. So for now, the asset will be depreciated on 31st January 2024. So once you've done this, you go up, confirm your entries again: car, motor, vehicle category. Confirm that you set them up very well: the name, the owner, the custodian, the location, the department, accounting dimension. You've checked is existing. You specify the purchase detail, which is the actual cost of the asset, date of purchase and date you put it to use, and date of depreciation. So at this point, you are good to go. So you save, and you submit. Okay, you save and submit. So now you submitted. You can see your table. Depreciation table: 50,000 per month. 50,000 per month. You can see, if you look at the end of the year, or the end of that 60 months, you see that the depreciation, accumulated depreciation, is also equal to 3 million naira. So that's it for setting up of assets for automatic depreciation. At the end of this month, the asset is going to be depreciated, and so on. If the month passes, just click on here, then click on, there's a field that will come up, click on past journal, and the system is going to create it for you. So thank you very much. So also, another thing we need to look at here is how to carry out asset movement. So this is our asset list. Assuming that this asset now is at Abuja, you want to move it from Abuja to Lagos, that is asset movement. This asset is handled by a particular staff. You want to pass it from one staff to another, you can move it. So you'll be able to track your asset wherever they are. So nobody can just enter an office, just carry maybe a laptop, move to his own office. No, it must pass through proper procedure, approval procedure, and somebody must be in charge of asset management. So that is it. So this asset na BMW, which is at Abuja, and is being handled by this employee. If you want to move it now from Abuja to Lagos, come to manage. You can say manage. You say transfer asset. Transfer asset. You can see it. On which date do you want to transfer this asset? It's today, which is 31st January 2024. What is the purpose of transfer? Transfer. To transfer it to another person. You can see the source location, which is the current location of the asset. Target location is Lagos. Lagos, good. Then what is the employee? Because the purpose of transfer is location. And transfer from Abuja to Lagos. Only if I'm communicating. Lagos, Abuja to Lagos. Okay, so at this point, you save, or you can put your reference type. Put your reference type. If it's purchase invoice, this is a reference number, reference name. Give it a name. Number 7. Purchase invoice number 7. Yes. Purchase invoice number 7. There you save. Save and submit. automatically this asset have been moved from Abuja to Lagos. I've moved from Abuja to Lagos. So another one, go back to asset, home page, asset movement, or go come at asset. Good. You can see that the location have changed to Lagos automatically. So I've been changed to Lagos. So that's it. And the next one is the scrapping of assets. Asset can be scrapped, you know, when there's no more in use. You just want to scrap it to zero both the cost and the accumulated depreciation. You open the asset, go to manage. You can say scrap the asset. Do you only want to scrap the asset? You say yes. You can see the asset have been scrapped. In this case now, the assets, depreciation cost and the depreciation value will be what? Zero. So let me show you the journal the asset have been passed. You can see it here. Let me show you. You can see it here. So cost have been credited. Motor vehicle accumulated depreciation is debited, and that's a gain. That's a gain because you put it into use since January. Since January, and you're scrapping it today, so the system will automatically, that's a depreciation this attributable to the use of this asset. That is what the system have taken off. So that's it. So the asset have been scrapped. You can see the status have changed to scrap. I don't know if I'm communicating, yes. But if you want to restore it back, just come here, go to manage, and say restore asset. You say yes. Yes, well done. Good. You can see that the asset is back. The asset is back. Is back because you have restored it. Then as a result of that scrapping, the system automatically passes a journal. It automatically passes a journal because you scrapped it. So that is what happened here. It passed a journal. That's why the past journal for January 2021. So this same asset can be revalued. You can see that the cost of the value of this asset is 3 million naira. Then less the accumulated depreciation. What is the value? That means you want to include the value to 3.5 now. Assuming you want to increase the value to, let me look at the cost. Okay, 3 million. Assuming you want to increase the value to 3.5 at any point in time, that's the revaluation. So come to manage, you say adjust asset value. Adjust asset value. You can see it here. Date. Also using today's date. Want to use today's date. Say motor vehicle. You can see the current value as at today. So what is the value? The value is let's say 3.5 million. Maybe that's the current value as at today, as at when you want to revalue it. 3.5 million. 3.5 million. Good. Cost center is Abuja. So Lagos. Abuja, because the asset have been transferred to Abuja before now. Abuja. Good. So you save and submit. The asset have been revalued. The asset have been revalued. If you go back to the asset, you will see that the value has changed. The value has changed. The value has changed. The depreciation value also changed. So that's it. So go back to the same asset. If you want to dispose this asset, click on this, go to manage. You can say sell asset. You want to dispose it, sell asset, to take you now to the sales invoice environment. Specify the date, specify the customer that want to buy the asset. You want to say it to limited. Then come down here. You can see that the asset is already here. Car, one quantity. So at what rate is he buying this asset? You want to say it at 5 million naira. At 5 million naira, that's a profit. You save, and submit. Save and submit. Good. You can see that the assets have been disposed. So if you go to the status of the asset, you see the status. Asset. You can see the status have changed to what? Sold. The asset have been what? Sold. So that is it for asset management. So from there you can view the various reports for the assets. You can view various reports. You can see the report, serial report, asset depreciation ledger. You see it here. I will give you detailed purchase amount, depreciation, accumulated depreciation, asset value, depreciation, and so on. So go back again. You can view the depreciation and balances. You choose the date from January to 31st January 2024. You can see it here. Motor vehicle. You can also view your asset register. You can view your asset register. So you can see, you can view your asset register. You just purchase one, just have one vehicle. So that's it. Thank you for your time. Now, if you have any question, you can put them together and ask. Thank you very much.